Welcome back. Breaking news. Markets across the world taking the latest missile launch from North Korea in stride. We've got fractional losses, futures hovering near the flat line. But the major indices are on track for their third weekly gain in the last 4 weeks. Joining us right now is Raymond James, Chief Investment Strategist, Jeff Saut, joining us. Jeff, good to see you.
Pleasure.
This market is on fire.
Yeah,
and you think it keeps going?
Yeah, well, we're a little cautious in the short term, but we're looking for a real big year-end rally as the markets have transitioned from a interest rate-driven secular bull market to an earnings-driven secular bull market. Earnings continue to come in better than expected.
Does it surprise you that we've got more provocations from North Korea and markets seem to be unfazed by it?
Yeah, it's really interesting. You had a crash in Bitcoin on the crypto thing out of China, that news. You had inflation hotter than expected the other day.
Yeah, the CPI. Yeah.
And then you've got the fat kid with the funny haircut shooting missiles over Japan, and the markets don't seem to care.
No.
Jeff, I love listening to you during the break on some of your facts, but the question I wanted to ask you was, if tax reform did not get passed at year end, would your fundamentals continue to be viewed the same way, or do you think legislative mishaps would overtake it?
Well, you don't know this about me, but I ran capital markets for a brokerage firm in the Baltimore, Washington, Annapolis. I lived in Annapolis. I still have very good contacts on Capitol Hill, and tax reform is coming. And for every 1 point reduction in corporate taxes, it hypothetically adds $1.31 to S&P earnings. So theoretically, next year, if tax reform goes through, you could have $150+ in earnings.
But
for
if
the
it
S&P.
didn't come through,
it's going to come through.
So Goldman.
So you're counting on it. That's making
I love
his
your
point.
optimism.
That's making his point.
That's kind of just sweet that you got this. But what's the time frame in your mind? Because we had the Treasury Secretary say it was going to happen before August. I served in Congress, and I'm still pessimistic about it. I want to be an eternal optimist, but what's your...
I think it's a 2018 event.
So the first quarter?
Yeah, probably.
And what about health care?
Who knows about health care?
I mean,
have no
it's such
idea.
a big sector of our economy. We didn't get anything done. People are going to start to have to sign up for their new plans here coming into fourth quarter. So how do you view that?
They're going to have to put money into the exchanges, because new health care is not coming.
I mean, you have so many counties, more than a third, that only have one option.
Wow.
There's not a new vote that's going to pass.
No.
Okay, by the expiration date at the end of the month.
But you have so many people who don't even have an exchange.
But I'll let you.
But what about those exchanges what about the insurance companies that have left the exchanges? How do you deal with that?
Well, new insurance companies are starting to come in, but it's not an easy. Jeff, go ahead.
That's why you don't have an answer.
I'm over my skis on this one.
No. I spent a week on Capitol Hill maybe 4 or 5 weeks ago. Before we went to Africa, we were in Africa for 3 weeks, and it's a mess. Healthcare is a mess.
So you don't think any of this impacts your bullish stance on the stock market?
I do not. Secular bull markets, you hear people say this is the second longest secular bull market in history, and their measuring lens is wrong. Because secular bull markets, 1949 to 1966, 1982 to 2000, they last 14, 15, 16, 17 years. And there's not many of us left around. In fact, Ron Barron said that to me. There's not many of us left around that have seen a secular bull market. This is probably the longest secular bull market of my career, longer than the 82 to 2000.
Well, to be fair, a lot of people are looking at tax reform, if we were to get it, even just tax cuts, as the gravy. They are looking at a market that's being driven by the fundamental story digging, and that's what we're talking about every day, the earnings story.
But to your point, I mean, the headline there is that Congress does not get this done this year. There's an article in the Wall Street Journal saying that the tax writing committees in the House and the Senate want to make their own mark on this tax reform bill, or this tax cut bill, whatever you want to call it, which basically says that they're going to be struggling to get it done. This is, again, if it happens in 2018, that's bad news for the markets. The only thing going for stocks at this point is the fact that treasuries are so unattractive at under 2.2% on the 10-year yield.
I do think the president surprised people because he actually put a marker and a date later this month to say the details would be coming out, and surprised a lot of people on Capitol Hill.
September 25th. September 25th.
Yeah, they weren't ready for that.
Yeah.
We'll see what happens on that day.
But then you got to get everybody in the Senate and the House on board with whatever that tear sheet looks like.
Well, that's the thing. That was just a sheet of principles, the white paper that we got in April. How's that going to be different than what we're going to hear on September
20th? That was 1 page.
Yes, exactly. That's
Jeff,
what I'm saying.
would you agree if they did business tax reform first and maybe split it up, you'd be more bullish on the timetable?
I can't be much more bullish than I am.
All right, good. Giddy up.
There you go.
Jeff, thank you. Jeff Saut joining us there.